Welcome friends. Asli Banya welcomes you once again. Today we have brought you another very interesting multi-bagger stock, that is Rajratan Global Wire Ltd. Rajratan Global Wire Ltd is the second largest tire bead wire manufacturer in Asia. Basically, if you compare the major bead wire manufacturing is in China. After that, it is Rajratan Global Wire Ltd. Let's see. This is our standard disclaimer. I am not a SEBI registered analyst. The views made in this report are only for educational purposes only. Before investing in this stock, please consult with SEBI registered investment advisor. Now, Rajratan Global Wire Limited. It is, as I mentioned, it is the second largest bead wire manufacturer in Asia except China. Bead wire is basically a very important component in the manufacturing of tires. It holds the tires to the rim while resisting the inflated pressure in the tire, and around 84% of the company's revenue are coming from the bead wires. The other thing is, for tire manufacturer, bead wire is a very important component. If there is any quality issue, the tire manufacturer may face erosion in their brands, so they are very particular in selecting the bead wires, and the bead wire cost is just 3% of the overall tire cost. So that is why they are not they are quite reluctant to go with the other manufacturers with lower quality or basically a lower price. So Rajratan Global also manufactures high carbon steel wires. This wire is extensively used in automobile construction and engineering sectors. Like in construction, you tie it with reinforcement. So manufacturing location, it has two plants. One is in Indore and the other one is in Thailand. Rajratan Global is the only bead wire manufacturer in Thailand. And if you see, Thailand is one of the export hub for the tire manufacturing area because generate they generate a lot of rubber over there, and the rubber prices are low in Thailand. And if you see, most of the investments in tires are concentrated in China and Thailand in Asian region. Coming onto the consolidated financial results, if you see, as Rajatan Global mentioned in their conference call, that up to 2015 they were not concentrating on growth of the company. They were concentrating on turning around the operations of the company. In 2009, they opened a plant in Thailand. So it took them 5-6 years to turn over turn over their operations and become profitable over there. So if you see like in year 2012, 13 and 14, the profit is almost negligible. And after 2015, they started concentrating on growth, which has led to increased profits. Now these are the latest quarterly consolidated quarterly numbers. Like March 2019, the revenue is around 128 crores, which has led to a net profit of 7.87 crores. Now these are the consolidated financials. The other thing is, last year the raw material of the company, the prices increased a lot. That is why you see the market margins have come down. So this has happened due to Kerala floods. So company is confident to pass over the increased cost of raw material to its customers. Now cash flow, if you see, the company is cash flow positive from operating activity, and they are regularly returning their loans from last 5-6 years. However, there has been consistent investment in increasing the plant capacity in both India as well as Thailand, and as well as there is an increase in working capital as well. Now, Rajratan Global's Thailand plant. Thailand is basically the Asia's largest tire manufacturing hub. So, like Thailand is producing around 37% of the global raw rubber supply, and there is like significantly lower rubber prices in Thailand. Even the US tariffs on China's tires is a booster shot for Thailand. There is a lot of, I would say, almost all the tire manufacturers are putting in their plant in Thailand now. So the Thai market size is estimated to grow at $3 billion by 2022, registering a growth of 12 to 14%. And the one part which I discussed is, like, Rajratan Global is the only bead wire manufacturer in Thailand. Rest bead wires are imported from other places like Vietnam and Indonesia, etc. The Thailand capacity, it has increased from 26,000 tons to 34,800 tons, approximately 35,000, and it has also added 8,000 square meters of warehousing capacity. Generally, Rajratan Global is enjoying a market share of around 20% in Thailand, but due to increased capacity, the market share is expected to go up by around 6-7 percentage points. Because the thing is, this industry is very specific from logistics point of view, and manufacturers, like if they have a approved manufacturer nearby, they would like to get the bead wire from the nearest manufacturer rather than importing it from other manufacturers. Now, important facts like the competitors of Rajratan Global in India are Tata Steel and Aarti Steels, both are running at 100% capacity, and the foreign competitors are basically from Malaysia, Vietnam, and China. Possibility of new competitors is very low because it takes around 2 years to put a new capacity. The There was an like I would say the increase in steel up by around 25% due to Kerala floods. Rajratan buys the steel on monthly basis, and the increase in raw material prices will be passed on to final customers. So bead wire, as I mentioned, is a very important component of a tire, and the cost percentage in overall cost of the tires is only 3%. So the entry barriers are quite high, and the approval process from various tire manufacturers is quite long. So say for example, like it took 10 years in Japan to get it approved from Japanese tire manufacturers. Rajratan claims that they have around 40% market share in India. So they are doubling the capacity from 36,000 to 72,000 metric ton. Like bead wire is around 60,000. So the market share they enjoy is 40%. And I expect it will go up to 60-65% once the capacity expansion has taken place, because they are approved from almost all Indian tire manufacturers. So, like let's take a cumulative capacity of Indian market is around 120,000 metric ton, and Thailand market size is around 95,000 metric ton. Now, coming at pros and cons of the company, like company is consistently paying dividends. Like the current dividend yield is 0.21%. Promoter holding is quite good. It is around 63.5%. Anti-dumping duties on there are anti-dumping duties on Chinese tires in India, which has led to less imports and more production in India, which is good for Rajratan Global. Then there is a one important point, like the one competitor in India which has a 9,000 metric ton capacity in India has shut down due to debt. They are debt of around 250 crores. This creates an opportunity for Rajratan Global for higher growth, because they're increasing, almost doubling their capacity, and there will be surely a slight increase in margins as well, because the price of bead wire will go up due to shutdown of this competitor. So they are approved from almost all the Indian tire manufacturers and clients of this company. And the other major thing, which is very important, so the customer retention, like 85% of the revenues are derived from customers which are with the company for more than 5 years. So if you see, the company has a quite a good moat. They are increasing the business, and scones, if you see, they are exporting a lot, so they are quite subject to currency rate fluctuation, which they also agree. But as the company size becomes bigger, they can hedge it up, and they can reduce the currency rate fluctuation effect on the company. Now, the final review for 2019, Rajratan Global Wire is available at CMP of 722 rupees, PE of 11.76, and market cap of 314 crores. The equity capital of the company is quite low, is at around 4.45 crores. There are only 43.5 lakh total shares. And if you see, so it comes to around 15 lakh shares, which are held by around 3,300 public shareholders. Revenue expected after 2 years is 1,000 crores, and net profit after tax is around 69 crores, and EPS of 138. So the next 2 years, as management has also highlighted in their presentation and in the conference call, is like they are the takeoff year for the company, and they are going to grow a lot. Now, The valuation part, the company is at a very interesting valuation. The minimum price expected is around 2069 rupees based on PE of 15. This is an approximately 3x opportunity from 2 years perspective. This is a low risk stock and probability of rise fall is low. However, liquidity in the stock is very low. So if you want to buy it in various installments. Otherwise, you might not get it. Okay. So, friends, if you like my report, so subscribe to my channel by clicking on the link below blue color arrow. Thank you and see you next time.